All right, good morning, everyone. Sorry for the late start here. Okay, let's get it going. All right. Yesterday we had another kind of end of session failure on the S&P. I think it marks about 4 or 5 days in a row where we've sold off into the close. And we failed more or less up near the same level, which is up close to that 1808, 1810 level. So this is, like I said, maybe the fourth or fifth session in a row. I mean, I think also, we've got what may be the biggest non-farm payroll number, in recent memory. I think that's coming on Friday. But yesterday we had this incredible ISM non-manufacturing number. That was a huge beat. I think we're at 57.3 or something along those lines. We had some better numbers on the housing starts and things like that. So data is looking good right now, and I think that's one of the reasons why it's continuing to keep us from being able to push higher. Obviously, taper is starting to become more and more priced in. One of the charts I'm going to show, the first chart I'm going to show, in fact, is going to be the U.S. 10-year, which is pushing up against some sort of resistance at the moment and looking to break close to the highs of the year in terms of yields. So I think it's important to continue to watch this going forward. Japan, we had up overnight. Obviously a bit of a mixed session in Asia. Shanghai, when I woke up this morning, was down maybe 0.5%, and then we finished up maybe 0.25%. But the Nikkei really spiking on the back of the weaker yen. I mean, I think it's the first time I can remember we've been in a 103 handle, and I don't know when. So this is, obviously on the back of some of these BOJ comments, fueling potential further stimulus. So I think really, really important. But we also, along with the same sort of theme that we've been looking at, or we're talking about with yields rising, potential tapering. We've got the same thing happening in gold. So we're really starting to see some sort of continuity in the different sectors this morning. Another thing that we're seeing is a bit of a blowout in South African bond yields again this morning. Yesterday we saw that happen in the afternoon session. Really made our retailers sell off. You can see the rand starting to weaken. I think we were about 820. I want to say 820 odd on the yields here locally, 10-year yield. Now we're at 843. So that's a 1.5 day move. Not even. It's a 1 day move from yesterday morning. So really starting to see some at least some sort of correlation across global equity markets, which is, to me, is good because we can it's easier to make decisions that way. Okay, there's no corporate action out today. Market data out today, like we had the non-manufacturing PMI numbers out in China, which were maybe a touch lighter than expectations. We had the local current account numbers as percentage of GDP. That's out at 10 o'clock. We've got current account balance as well out at 10 o'clock. We'll obviously probably see some sort of impact on the rand there, depending. The rand is really pushing up against some levels, and I think we're actually breaking out of a long-term channel in on the pound this morning against the pound. We've got unemployment out in Spain. We've got PMI construction in the UK, and then we've got PPI numbers year on year in the Eurozone. Okay, so let's jump into the maps. Since I did the charts this morning, went through the maps this morning, the rand has really turned a little bit more against the pound here. We're starting to potentially look to break to the through the upside here in this chart. So I think we got to continue to watch this closely, but we're starting to get properly oversold here in the rand, especially against the pound. Okay, first chart I want to look at is the U.S. 10-year Treasury, and that is not pulling up. Let's just try that again. Okay, there we go. We got it there. Okay, you can see here at this is the yield we're looking at here at 280. we're coming up against some sort of resistance, but looking potentially to break out in a bit of a continuation pattern. We have, after we had this pullback after this nice long run from May. We made a little bit of a pullback here, maybe a little flag pattern, and we're starting to break out to the upside of this. So I think, to me, the markets right now, like I said, is starting to show us starting to show their hand a little bit. Obviously, on the back of that ISM number last night, we got it actually made the market sell off a little bit in the States. You're seeing it in the emerging market currencies this morning. You're seeing it in the emerging market bond yields again this morning. And unfortunately, I can't look up. I can't show you the chart on the South African 10-year yield. Otherwise, I'd pull that up right now because we're getting very, very close to the highs of maybe a month or two ago. So keep that in mind this morning. It could put some serious pressure on the could continue to put pressure on all the interest rate sensitive stocks, especially retailers and things like Growth Point and those type sectors. All right, let's look at spot gold. Spot gold, obviously we had this beautiful little head and shoulder pattern, which we broke down out of. I can't draw a line. There we go. We dropping here on this target, I would say, let's look at the target, call it, 1275, dropping from 1425, call it. Okay, so we're looking for $150 on the downside from 1275. So that really puts our target, significantly lower than this. Maybe $75 lower than this 1198, 1199, 12, whatever it is called, 1200 on the gold price. We get a close below this 1200 level on the gold price. I think that the things could get ugly quickly, and I think there's even more behind this than just the interest rate story. I think you've got the Bitcoin craze that's going on right now that's putting pressure on the gold price. So I think this is one that's going to be needed, that can be watched closely. You can see how the gold shares got hammered last night in the States. I wouldn't be surprised to see that continue to happen. Some of these shares are getting dangerously close to having to do some sort of capital raise or something. I mean, they're pricing these things into zero at the moment, so just keep an eye on those. All right, Barclays Group. Just wanted to show this, this sort of level here, 135 to 136. Wherever you want to put it here, let's draw it a little bit lower. We've kind of popped right up above that support. Those were previous closes, so I'm just going to draw the chart from there. We popped right up above that support level. It was support, it then became resistance. So we popped above that resistance level, and we're kind of putting in a little bit of consolidation. Yesterday, at one point, it looked like we were going to break out to the upside, and then we just kind of pulled back a little bit. They restated the numbers at the end of yesterday. I haven't really seen anything on it this morning, but if I'm not mistaken, they were restated better. So I would expect this thing to continue to catch a bounce this morning. We may end up getting a quick fill the gap play up here from when we pay the divvy close to around 144. All right, Naspers yesterday. We finally traded to a new all-time high here. We broke above what that open that one morning after we had a big session out of Hong Kong with Tencent. That was at $80. We closed above that. We closed at 981.15, and we actually traded intraday up to about 86 odd. I wouldn't really consider this a breakout yet. You can see that on the chart. It's just too close to say it's a breakout. But if we can get up into the mid 80s today and can get a close there, then I think this thing will probably be either a next day or next 2 days to 1,000. But just watch us closely. If we end up failing here a little bit off the 80, we may struggle to continue to get there quickly. All right, breweries. I'm just pointing out here that breweries slightly dropped support, which support is at 520 there. In fact, it doesn't even, it's not a significant drop, obviously, but this one's one to watch this morning with the weak rand, obviously showing a higher price in London for the close. But if this 520 level continue to be on the offer, if we continue to be under this 520 level, we could quickly drop about $15 in SA Brewery. So keep an eye on that one. The last one I'm going to show is going to be Tiger Brands, which is coming down. We'll look at it on a 2-year. coming down to test support again yesterday. Kind of managed to hold on that wick. You can see there around the 280 level. I think this is, this chart's really definitive to me. The trend lines here are just so perfectly aligned. That I think that when we drop this level here, that you could really see a quick knee-jerk reaction to the downside. So just watch this closely. We drop at 280. I think Tiger Brands has some significant downside. That's it for today, guys. Thanks a lot.